In less than 1 minute, I'm going to be walking you through on how to calculate your Binance future trading fee. So stick around. So first thing first, there are a few factors that determine how these fees are being calculated. The first factor is your leverage, and the second one is the choice of margin, and the third one is the choice of order type. I'll be explaining all of that, how they affect your future trading fee and how you can minimize them, so that way you can get to pay lesser trading fee instead of a whole lot for trading fee. Because apparently I've been getting DMs how Binance are deducting a whole lot for trading fee. So I'm going to be showing you how these fees are being deducted and how you can minimize them, so that way you will not pay a whole lot for fees. So let's get into the tutorial real fast. So first thing first, let's get over to the choice of leverage, how leverage affects this future trading fee. So leverage affects it in a sense that, let's say for an instance, I am on 3x leverage, because apparently there are up to 100x leverage. If you should click on that icon, you get to realize that there is 1x, 2x, 3, up till 100x, depending on your account size, by the way. So the leverage, when the leverage increases, your fees also increases as well. Because imagine you are on, let's say 3x for an instance, that's the one I'm currently on, and you want to take a shot for an instance using limit order. Okay, because when using limit order is going to make you pay a fee of 0 point, I think, let us check that. The fees is on Binance website. I'm going to be showing you that in a second. Just head over to your browser and type in Binance future trading fee. Okay, look at it there. Go over to this first page. When you type in Binance future trading fee, you get to realize that Binance is going to show you how much you are going to be paying for this fee, so that you can use it to now determine how your fee looks like. Let's use the regular one. This is the regular one, which majority of us are classified under the regular one, by the way. So when you are trading with USDT as your predominant initial currency, you are going to be paying 0.02% for maker and 0.05% for taker. Taker is like using market order, and maker is like using limit order. Okay, whenever you create an order and it's got pending on the order book, that is when you are making to the market. But if you use market order and it instantly get executed, you are taking out from the market. So when you are taking out, you'll be paying way more compared to if you are making to the market. But for the sake of this video, I'll be using this initial 0.02 and 0.05 to calculate these fees. Okay, so if I am to go on a short for an instance using market order, because market order is when you are paying the 0.05 I told you initially, so you are paying way more when using market order compared to if you want to use limit to create it. So let's calculate this. I have 340 and I want to go on a short using market order with 3x leverage. That is going to be, your leverage also affect this. I've combined both the leverage now and the type of order type. So I will show you the other one, which is the margin. Margin is simply the USDT, nothing too serious. So let's calculate everything in this video. So if I'm to go short, it is going to be 340. 340 is my initial margin. Okay, that's the USDT times 3, which is going to give me 1020. 1020 is the amount of money that I can use to sell this coin if I am to short it now. So the fee is deducted from the amount of money that your entire portfolio is worth when you short the coin or when you long the coin, okay, using any of your preferable leverage. When the leverage increases, you get to realize that the margin, the entire portfolio margin, will increase as well. If let's say I want to use like 10x, you get to realize that it will be 3,400. So this fee is deducted from this initial total margin that both your collateral times your leverage gives. That's how the fee is being deducted from that amount. So if I'm to deduct 0.05 from this 3,400, it is going to be 0.05 percent times 3,400. You get to realize that you'll be paying 1.7 when you basically just click on sell using market order. But when you are using limit order, it is always discounted. That's the more reason limit order is probably much more preferable, because limit order will make you pay 0.02 instead of 0.05 initially, so that when you multiply that fee by the amount of money that your portfolio is worth, you get to realize that it will be way lesser compared to the initial 1.7. You see that? And keep in mind, these fees are being deducted on basically any order at all that got triggered, either with the limit or with market, using those respective percentage for the fees. So whenever you open a trade, either long, fees is always applicable. You choose to like close out along the line, fees is always applicable. Or you choose to trail out profits, or your stop loss gets hit, or your take profits, basically any order at all that got triggered either using limits or market, fees is always applicable. Keep that in mind. And the fees is deducted from that total amount of money that your portfolio is worth at that moment it got triggered. Whenever you be in profits and eventually your TP gets hit, the amount of money you'll be paying when your TP gets hit will be more compared to the amount you paid when you get into the trade. So when you are in profit, your margin increases and the fees are being deducted from the total amount your portfolio is worth at that moment it got triggered. And you can also pay less whenever you are in loss. So eventually, let's say you paid 1.7 when calculating using that initial calculation I made initially during the course of the video, and you now get stop out or your SL gets hit. That means you are losing, the market goes against you. You'll be paying little trading fee because the margin has decreased. So when the margin decreases, that is the amount of margin that will be used to calculate that fee, not the initial 3,400 you use in opening at first. So the fees is deducted, based off of the current worth of your portfolio at any given time. Okay, so that was how all of this works, and I have explained everything. I have used how leverage affects that fee, how margin also affects it, and the other type. Let me go over it again. Leverage affects it in a sense that when your leverage increases, your portfolio amount also increases, which you'll be paying more. When you use a specific order type, which is either market order or limit order, as we all know, the predominant one, there are some respective fees applicable, as you've seen earlier in the video. Now for the margin is simply the USDT. There are some people that prefer to use other currency to trade instead of the USDT, and you can get to realize that you'll be paying less compared to if you are using USDT rather. So when using USDC, you see those fees will reduce eventually. So you can see USDC will make you like pay little to no trading fee compared to the initial USDT. So it's all left for you to decide, either using USDC or USDT eventually, whichever one that best suits you. So that's how all of this affects the future trading fee. And there is a way to minimize it. If you are using USDT, there is a way to minimize it. Just buy BNB, because you can see when having BNB, you'll be paying 10% less to this compared to if you don't have BNB at all. So when having BNB, the fees, these 0.02 and 0.05 respectively, will be discounted by 10%, so that you can get to pay 0.018 instead of 0.02. You can get to pay 0.045 instead of 0.05. So that is it. Just have BNB. Buy your BNB on your sports wallet of any amount, and then quickly transfer it to your future wallet, simply by clicking on transfer there, and transfer from your sports. When you buy the BNB from your spot, transfer it from your spot simply by clicking on this arrow to change it from spot to futures. Then you click on this coin to select BNB when you have it, and then you transfer it using max, or you put in the amount, and it will reflect on your futures. Then you activate it for the 10% to be activated. So click on this trade to activate it, these three dots, click on fees, and activate this discount, this last one. So this last one, when you on it, as usual here, is on already. When you on it, the fees will be discounted, so that you can pay way less compared to that initial one without the BNB. So that's how all of this works. I'll see you all later. Do hit the like button and give a follow, so that you not get to miss tricks and tips like this. Okay, until then, that'll be all for now. Peace out.